Hello, Hamish here from mortgagesonline.co.nz. Wanted to talk to you today about the big changes in terms of deposit requirements from the RBNZ. What impact is it really going to have in terms of the actual buyers out there, in terms of house prices, which we all love talking about? Okay, are we going to save the world by getting rid of investors, those evil investors? I'm one of them as well. Full disclaimer there. Potentially not. If we look at this graph here, this is the actual number of borrowers. 2016, when the big deposit requirements changed for investors, what we did see was a big decline in terms of the number of borrowers that were investors. Still, the biggest chunk of the market in terms of borrowing is the other owner-occupiers, right? These are people that already have a home. This also includes refinances and top-ups as well, you should know. So now, post-COVID, this is COVID here, obviously. What we have seen is that a lot more investors have jumped back in, along with first-home buyers. Now, interesting, what this graph revealed to me, which I didn't realize, is the number of investor borrowers are still below back in 2016, as much as the media reports how crazy it's getting out there, and hey, it is pretty crazy in the auction houses. But does it have a lot more to do with actual homeowners trading up and first home buyers? I suspect so. But I think what is going to change all of this, how many investors are there that will be removed by changing the deposit requirements? Well, there are some stats and numbers on that as well. This is the number of borrowers with less than 30%. Really, post-COVID, that number has increased quite a bit. If we think about this number, and this also includes top-ups and refinances, but let's say we remove a portion for that, you're still talking about hundreds of investors in the market that potentially would be held back by the deposit requirements. In saying that, again, this graph here is really a small portion of this here, right? Because this is still a portion of this grey line here. So if we look at that number, okay, yep, definitely some impact on the housing market. Remember, if you remove a few hundred investors, you're still talking about more than 11,000 houses changing hands per month at the moment nationwide. So it's still a minor part of the market, okay? I think the bigger thing that we are starting to realize here is that supply is an issue, okay? I think we always kind of knew that, but supply really is going to be somewhat fixed on its. Some of it is going to be fixed on its own somewhat because of some of the things like the Auckland Unitary Plan. As planners, builders, architects get a better handle on that, as more funding comes on stream, you will see a lot more houses in Auckland. You're probably already seeing that happening around Auckland. The big thing that's been missing now, or I think the big bottleneck really in terms of supply, is really the actual funding. Funding for developers has been challenging. Finance companies are coming back on stream. We're definitely getting calls from funders that are quite keen to work with developers, which is a really good sign when you think about the kind of COVID world that the kind of environment we're in. But definitely there are more and more depositors now that are willing to put money into sources for these developers to get funding. Peer-to-peer lending, whether it's finance companies or old solicitors nominee account type arrangements. There is funding available for developers now. So yeah, I think it's going to be an interesting space. I think that basically what you might find is that basically the type of home that first home buyers get is going to definitely be changing in the coming years. Investors are going to find it a little bit more difficult to get on the ladder if they're investing for the first time. If you already have some houses, obviously building up that deposit is just being patient and waiting for the house prices to go up. There's also talk about debt to income ratios. Do I think that's going to have an impact? Is it going to come in? Again, you have to be careful when you start to talk about debt to income ratios. Also, you've got to start to be careful when you start to talk about government guarantees and things like that for home buyers to get into the market, because what you're starting to slowly get away from is the actual judgment from the lenders. Now, lenders can understand what a good credit risk is, but these kinds of very broad rules, what it tends to do is it starts to make lending more political than an actual real assessment between what a willing lender and a willing borrower would like to do. And that can lead to its own issues, and it's not unknown issues. There are examples of this really all around the world. But thank you for listening. Hopefully that's kind of been handy for you. Tune in soon.